Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. California Water. A stable investment or a slow decline? California Water Service Group is one of the largest publicly traded water utility companies in the United States, serving over 2 million customers. The water utility sector is considered defensive, meaning it tends to be resilient to economic downturns. However, it is essential to analyze whether investing in its stock in 2025 is a sound decision. The financial results for the fourth quarter of 2024 indicate a significant decline in profitability compared to the previous year. Earnings per share stood at 33 cents, down from 52 cents in the fourth quarter of 2022. Net profit dropped to $19,460,000 from $29,940,000 a year earlier. The gross profit margin slightly declined to 48.38% from 48.74%. While the net profit margin fell to 8.85% from 14.04% in the previous year. The return on equity was 4.82%, down from 8.49%, suggesting weakened capital efficiency. Liquidity also deteriorated, with the quick ratio falling to 0.38 from 0.40, and the current ratio declining to 0.60 from 0.69. Which may indicate potential difficulties in meeting short-term obligations. Projections for the coming years indicate a gradual increase in financial performance. In 2025, the company is expected to generate $991,880,000 in revenue, with an operating profit of $182,190,000 and earnings per share of $2.32. In 2026, revenue is forecasted to rise to $1,040,000,000, operating profit to $216,076,000, and earnings per share to $2.54. By 2027, revenue is projected to reach $1,090,000,000, with operating profit increasing to $249,500,000 and earnings per share reaching $2.87. The water utility industry is characterized by stable demand, and water suppliers typically have reliable revenue streams due to government regulations. However, rising operating costs and the requirement for regulatory approval of rate increases could limit profitability growth. Population growth in the areas served by the company supports long-term development, but factors such as climate change and the need for infrastructure investments may negatively impact financial results. The ongoing trade conflict between the United States and China may have a moderate effect on the company's operations. Potential tariffs and import restrictions could increase infrastructure upgrade costs, but the company's reliance on local supply chains reduces the direct impact of global trade tensions. Technical analysis presents mixed signals regarding the stock's outlook. Over the past 5 days, capital inflows have been inconsistent, suggesting investor uncertainty. The stock is trading near its support level of $44.64, while the resistance level stands at $45.64. If the stock price breaks through resistance, further gains may be possible, but the lack of strong catalysts could keep the stock trading within its current range. Considering these factors, California Water Service Group offers the stability typically associated with the utility sector, but faces increasing profitability challenges. Investors seeking safe, defensive assets may find the stock appealing, particularly due to its dividend payments, while those looking for high-growth opportunities might find better prospects elsewhere. In the short term, declining financial results and weaker liquidity metrics could limit upside potential. In the long term, stable water demand and projected revenue growth could support share prices, but investors should closely monitor the company's ability to implement rate increases and control operating costs. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice. portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, number 596/2014 of the European Parliament and of the Council of April 16, 2014, on market abuse, and the Commission Delegated Regulation, EU, 2016/958 of March 9, 2016, supplementing Regulation EU. Number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various Internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.